Hey everyone, and welcome back to...
Our podcast, 2030 Crypto Price Prediction.
That's right, Clara. So glad you could join me today. I mean, it's a big one, isn't it?
Absolutely, Jason. Always a pleasure. And today, oh boy, we're diving deep into some fascinating stuff.
We're gonna really get into the nitty-gritty of what the cryptocurrency market might look like by 2030, from a data analyst perspective, which I think is super important.
Yeah, I mean, it's not just speculation. We're really looking at some, concrete insights from the data. Should be quite the ride.
So, Clara, let's just jump right into those eye-popping numbers. I mean, the projections for 2030, they're pretty wild, aren't they?
Oh, they really are, Jason. When you look at the reports, the global crypto market cap, it's actually projected to surpass $10 trillion by 2030. Just let that sink in for a moment. 10 trillion.
10 trillion. That's a massive leap from where we are now. And speaking of individual assets, Bitcoin, of course, the big one, the data suggests it could hit, between $160,000 to $230,000?
Yeah, that's right. $160,000 to $230,000, which is, wow. And that's based on, long-term supply-demand models and really, really significant institutional growth. We're talking about major players like Kraken, ARK Invest, Fidelity. They're all in, right?
They are, and that's a huge part of this, I think. But it's not just Bitcoin, right? Ethereum, which, has been a powerhouse in its own right, it's also looking pretty strong.
Yeah, absolutely. Ethereum, driven by those smart contracts and the whole DeFi ecosystem, it's expected to exceed $25,000. Assuming, of course, successful scalability and, network upgrades. That's a big caveat. But it's looking promising.
Yeah, the network upgrades are key, but 25,000 plus for ETH and potentially over 200,000 for BTC, it really paints a picture of just immense growth, doesn't it? It's pretty exciting.
It really does. And it's not just like pie in the sky stuff. It's based on these trends we're already seeing with adoption and, technological improvements. So yeah, I'm pretty stoked about these projections for sure.
And, speaking of institutional growth, Clara, that brings us to one of the biggest drivers behind this projected expansion, institutional adoption. I mean, since 2020, we've seen some seriously big names stepping into the crypto space, right?
Oh, absolutely, Jason. I mean, we're talking about like BlackRock, Fidelity, JP Morgan. These aren't just, small players dipping their toes in. These are financial behemoths, and their involvement, it lends so much credibility to the space, which, obviously accelerates the whole thing.
Yeah, it's a huge stamp of approval, isn't it, when institutions like BlackRock, for instance, start offering Bitcoin ETFs. It's not just a niche thing anymore. It really opens the floodgates for, a lot more traditional money to flow in.
Exactly. And it makes it easier for your average investor or even, bigger funds to gain exposure without having to directly hold the assets themselves. So it simplifies the process. And that's a big, big deal for widespread adoption.
For sure. And then there's the other side of the coin, literally, Bitcoin's limited supply. I mean, we always talk about it, but it's really crucial, isn't it? The scarcity factor.
It's fundamental. It truly is. Bitcoin, with its capped supply of, 21 million coins, that's it. That's scarcity. It's a core part of why it's viewed as this digital store of value. It's like digital gold, right? Unlike, say, fiat currency that can be printed endlessly.
Yeah, no, it's a stark contrast. And in an environment where we've seen a lot of quantitative easing, a lot of money printing, that fixed supply, I think, really resonates with investors looking for, something that can't just be devalued by an increase in supply.
Yeah, precisely. And that inherent scarcity, it creates a very powerful demand dynamic. As adoption grows and the supply remains fixed, well, basic economics suggests that price is gonna go up. It just does. It's that simple.
Yeah, supply and demand, the oldest rule in the book. So when you combine the legitimacy brought by institutional players with that undeniable scarcity of Bitcoin,
It's a potent mix for price appreciation, isn't it? I mean, it really starts to paint that picture of a much higher valuation.
It really does. It's not just one factor. It's this confluence of these really strong fundamental drivers. And, the institutions, they're not just buying in, they're building infrastructure around it, which is, again, super important for long-term growth and stability, I think.
And, beyond just the institutional backing and the scarcity, there are these huge macroeconomic factors at play here too, right? I mean, rising inflation, currency debasement, just general global uncertainty. That's really pushing people, investors, towards decentralized alternatives.
Yeah, absolutely, Jason. I mean, when you see traditional markets, sometimes struggling or currencies losing purchasing power, people start looking for, somewhere else to put their money. And crypto, particularly, Bitcoin as a digital store of value, becomes incredibly appealing in that environment. It's a hedge, really.
It really is. It's like, where can I put my money that isn't tied to, the whims of a central bank printing more and more? And crypto, for many, fills that void. But then there's also the regulatory side of things, which I think is key for long-term confidence.
Oh, definitely. Regulatory maturity, I think, is one of the big ones. By 2030, the expectation is that most developed nations will have, pretty comprehensive crypto regulations in place. And while some people might see that as a bit restrictive, I actually think it's crucial for broader adoption.
Yeah, I tend to agree. I mean, it lends legitimacy, doesn't it? It makes it less of the Wild West and more of a recognized asset class, which, makes it safer for larger players and retail investors alike.
Precisely. It brings clarity, Investors want certainty. They want to know the rules of the game. And clear regulations, they won't stifle innovation as much as they actually, they provide a framework for it to flourish within in a responsible way, I think.
Good point. And then underpinning all of this is the tech itself, the technological advancements. We're talking about layer 2 solutions, interoperability protocols, all designed to improve scalability and ecosystem connectivity.
Oh, absolutely. This is like the engine of the whole thing. Layer 2 solutions, for those not familiar, are basically technologies built on top of existing blockchains like Ethereum to make them faster and cheaper to use. Think of them as like express lanes.
Right, exactly, because the main network can get congested. And then interoperability, that's allowing different blockchains to talk to each other, right? Which is super important for a seamless, interconnected crypto world.
Yeah, totally, because right now the crypto space can feel a bit fragmented, but with more interoperability, you can imagine, assets and data flowing freely between different chains, which it unlocks so much potential for new applications and services. It's really exciting.
It truly is. So when you bring together those macroeconomic pressures pushing people into crypto, the increasing clarity from regulations, and then the underlying tech constantly evolving to make it more efficient and user-friendly, you really see how this market is poised for significant growth, don't you?
Yeah, it's like all the pieces are falling into place, really. It's not just hype anymore. It's fundamental shifts in finance, technology, and even global economic perceptions.
So, Clara, we've talked a lot about the upside, the growth, the potential, but, it's not all sunshine and rainbows, is it? There are definitely some risks we need to consider when we're looking at 2030.
Oh, absolutely, Jason. And I think it's crucial to address these head on. One of the big ones that comes to mind immediately is what's called regulatory overreach.
Right, because, we just talked about regulatory maturity being a good thing, but there's a fine line, isn't there, between clear guidelines and, laws that could actually stifle innovation.
Precisely. You want regulations that protect investors and prevent illicit activities, but if they're too strict or too cumbersome, they can actually choke out the very innovation that makes this space so exciting. It's a delicate balance for governments, really.
Yeah, it's a tightrope walk. And then as the technology evolves, we also have to talk about security threats, don't we? I mean, cybersecurity is still a massive challenge in this space.
Yeah, always. As crypto becomes more mainstream, it unfortunately becomes a bigger target. Hacks, scams, phishing attacks, they're constantly evolving. And so the security measures have to evolve even faster to keep pace. it's a never-ending battle, I think.
It truly is, and that's something investors, constantly have to be aware of. Keeping your assets secure is paramount, but then beyond that, there's the big one that everyone talks about, which is just market volatility.
Oh, definitely. Crypto will always carry high price volatility. It's just the nature of a relatively new asset class that's still finding its footing. And it's influenced by so many global factors.
Yeah, I mean, you look at Bitcoin, Ethereum, they've had these massive swings. While we're predicting high values by 2030, that doesn't mean it's going to be a smooth ride to get there. There will be ups and downs, significant ones.
Exactly. So for investors, it means, prepare for a bumpy road. It's not for the faint of heart. While the long-term trend might be up, those short-term fluctuations can be pretty intense.
Yeah, exactly. So for investors, it means, prepare for a bumpy road. It's not for the faint of heart. While the long-term trend might be up, those short-term fluctuations can be pretty intense.
Yeah, absolutely. And, speaking of not for the fan of heart, it's also important, I think, to look beyond just the big two, beyond Bitcoin and Ethereum, because by 2030, we're likely to see a lot of altcoins and other blockchain platforms really take center stage, especially those focused on new specific areas.
Oh, for sure. I mean, they're not just, Bitcoin clones anymore, right? We're talking about platforms that are solving real-world problems. Like, what are some of the key areas you're seeing emerge?
Well, definitely DeFi, or decentralized finance, for short, is huge. It's, reinventing traditional financial services like lending and borrowing, but without the intermediaries. And then there's real-world asset tokenization, which is super fascinating.
Oh, so like taking actual physical assets like real estate or art and putting them on the blockchain. That's pretty groundbreaking, actually.
Exactly. And then also supply chain and enterprise blockchain solutions for, transparency and efficiency in logistics. And of course, the big one, AI and blockchain integration. That's a massive area of growth.
AI and blockchain, that's a powerful combo. So given these specialized areas, are there any specific tokens or projects that really stand out that you think listeners should keep an eye on, in this multi-chain future?
Oh, absolutely. When we look at those promising tokens, Chainlink or Link comes to mind for its role in bridging real-world data with smart contracts. It's crucial for so many of these applications.
Yeah, Chainlink's like the backbone for a lot of that, isn't it? The Oracle solution?
Precisely. And then we have Polkadot, or DOT, which is all about interoperability, connecting different blockchains, which is just so important for a truly integrated ecosystem. Solana, or SOL too, with its high transaction speeds and scalability, has really made a name for itself, especially for decentralized applications and NFTs.
And Avalanche, AVAX, right? They're also in that mix, aren't they, with their own unique approach to scalability and, customized blockchains?
Yep, Avalanche is definitely one to watch. All of these platforms, they're not just about being speculative assets. They're actually building out real utility and infrastructure for the future of digital finance and beyond. It's not just about the price, it's about what they enable.
That's a really good point, Clara. It's not just about the numbers anymore. It's about the underlying tech and its real-world application.
Yeah, exactly. And, when we look ahead to 2030, the biggest takeaway, I think, is that cryptocurrency is very likely to be fully integrated into the global financial system. It's not going to be this niche thing anymore.
Yeah, I agree. It feels like we're really moving past the early adopter phase. And while it's, of course, impossible to predict like exact prices for every single asset, the overall trend, it just shows broader adoption, right? And so much stronger utility.
Absolutely. And with that, we're going to see more regulation, which, some might see as a negative, but it actually builds confidence, I think, for institutional players and for the general public, really. It also hints at that growing scarcity for certain assets, like Bitcoin, becoming even more pronounced.
Yeah, that's true. Regulation brings a level of legitimacy that, it probably needs to go mainstream.
So for like investors, developers, and even analysts like us, what does this all mean for the coming years? What are the big opportunities?
Well, it means immense opportunities to shape the future of digital finance. For investors, it's about identifying those projects with real utility and staying power, not just chasing hype. For developers, it's building the infrastructure and applications that leverage this new paradigm.
Right, and for analysts, I guess it means continually adapting our frameworks as the market matures and, finding new ways to assess value beyond just market cap. It's a very dynamic space.
It really is. It's an exciting time. I mean, we're just at the cusp of seeing this technology really, truly integrate into our everyday lives, beyond just investment, into actual use cases.
Well, this has been a really insightful discussion, Clara. Thank you so much for breaking down all these predictions and drivers for 2030.
My pleasure, Jason. It's always great to dive deep into the future of digital finance. And a huge thank you to all our listeners for tuning in to 2030 Crypto Price Prediction.
Yes, thank you, everyone. We hope you gained some valuable insights into what the crypto landscape might look like just a few short years from now.
Absolutely. We're excited for what's to come, and we look forward to having you join us next time for more discussions on the future of crypto.